Good day, all. Ira Epstein with your Spider ETF wrap-up, and this wrap-up is for the weekend of January 30th, Sunday, 2022. Well, it's football day. It's not a very good start for Cincinnati KC, as I'm doing it. 3 touchdowns already for KC. I'd like to see a better game out of it. I watched tennis this morning, too. I got up at 3:30 to watch Nadal. What a comeback that was, and then racing. So I'm worn out, as you can imagine. All right, but is the market worn out? And that becomes the really bigger issue of everything. Let's look at a few things. Number one, Russia continues to build forces, according to U.S. intelligence. The Ukrainian president doesn't think the situation is as bad as the U.S. and NATO is making it out to be. With the Chinese Olympics about to kick off now, does Russia invade while those are going on at this point? That's going to be a difficult one, because one of the things that you know is the alliance between Russia and China has picked up a lot of momentum. And if the Russians get cut out of the SWIFT system, well, who are they going to sell their energy to? Their natural client would be China. And China likes to do nothing more than get countries riled against the United States. So that's where you're at. Do I think there's an invasion imminent? I'm not a military planner. I don't know. I'm just presenting the facts. When we look at the markets, though, we have a sea of green behind me. We had a reversal day on Friday. The markets did finally get a bounce in them, and that is good news. We know that interest rate hikes are coming. The question is, are they 3, 5, 7? Nobody seems to know. The Fed has already told us this week that they're not going to use the balance sheet as their main tool. It's going to stay with interest rates, so we're getting more information. Now, you know that we're using NVIDIA. I want to change this tomorrow on Monday, so do me a favor. Right now, take a moment out. Tell me what you'd like me to cover. All right, I can replace it with a stock, a SPDR, ETF, whatever I see. I'll go through them, and then I'll pick it, and starting tomorrow or Tuesday, I'll start putting that in and cover it for the next approximate 5 days. So we'll rotate the front one. As you can see, this has fallen out of bed. So this is a market that was just recently near $350. It's now gotten down this week to $208. So it has lost a considerable amount of its value, to put it mildly. But I think as a chartist, you're entering the support areas. If you really look at all this whole area up, there was no consolidation. This was the consolidation phase right there. So getting back through that, I think, will be difficult. That's where I'm looking for the market to find its first leg of support. The trend is down with the pattern on the swing line study of lower highs, lower lows. Now, for those of you that are interested in swing lines, it's in my charting course on our website at www.iraepstein.com under the word education. But you take the current week, and then you're looking to see what the prior week was. This is a lower low week, so it's one of my 5 rules as to where you draw the line. And what I'm looking for is a pattern, because at its most simple form, a downtrend has lower highs and lower lows, and that's what you've got. You'd break that pattern on this chart if you got back through 313.30. That's over $105 away, or approximately there. The most likely resistance point is going to be the 18-week moving average of closes. This is the 100, the 200. So when looking at this, and this is a simple arithmetic moving average, I look for the resistance there. What often happens is when a market is in an uptrend, it'll come down, challenge that key average. I'll show it to you, this one. It did absolutely stall, and it has to make a decision from that average, what next? In the case of this market, it went into a further decline. When you do that, it's not uncommon that if you rally back, what was support becomes resistance on the first leg. Another support and resistance point is often the Bollinger Bands. This is an algorithm in the black dashed lines designed to keep the market trading within it 95% of the time. Now, if you want the formula, just go to your Google, type in Investopedia, type in Bollinger Bands. It'll give you some excellent ideas on it. I think some of the best around. I really have expertise in this, a lot of it. And I even teach an enhanced Bollinger Band course that is also in the education site of www.iraepstein.com. Suffice to say, I'm looking for resistance back at that number. If the market wants to keep falling, momentum is down, trend is down, nearby support 192.17. So the market can still fall down there. That is still a live number on the downside. On KBE, which is the ETF that tracks the KBW band index, you can see, and that's the banks. Higher high, lower low. Look for a battleground right here. It's interesting that the bank index didn't do well at all given how the markets were reacting to interest rates, because higher rates, if they don't shut off the economy, are good for the banks. Actually, if you take out this week's high, I'll just give you a what if, and that's 56.81. You're sitting at 54.58, and you were to close over the 18-week average of closes, I could turn bullish because I already have one low in place. That could give me another one. There's what ifs. I'll try to bring you up on that during the week if I see it occurring. In XLI, the industrial sector, what you've really been doing is more of what you've been doing already. There's nothing new here. You've been traveling between the upper and lower Bollinger Band now, actually since the summertime. You can come all the way back here where it began, but the first time you hit the band was back here in August, and you have just been going back and forth. I don't see that changing anytime soon. In the energy sector, here's my dilemma with energy, and I know the market closed over the Bollinger Band. First, you only stay over it 5% of the time. Second, is it really in OPEC Plus's best interest to have $90, near $100 crude oil possibly? I don't think so. I think that that is like creating, if you will, another big headwind for the whole marketplace that they service. That marketplace is just coming out or trying to come out of the COVID situation. I think they're looking at it, and I'm not sure they can do anything about it. There's 23 nations. Only about 4 have additional capacity. They don't have enough capacity so far to pick up the differences that are out there. We know that part of also what's hitting this is the question, what happens if Russia invades the Ukraine? What happens to oil? Is oil going to be bid up from other areas that would serve Europe and the like? You've already seen Germany does not want to do anything to interfere with them getting some 40% of their oil from Russia. So everybody within NATO, even though they want to put on a united front, they're not there. Germany, the strongest economy, absolutely doesn't want to do anything. You just read it, it's in all the papers, to shut off that energy supply coming to them. There's a price to pay for that, and they realize it. All we can hope is this thing gets resolved one way or the other diplomatically, but it's all up to President Putin. It's not up to anybody else. It's his call now. You're over the band. What do I teach? I teach traders never to buy long over the band. Momentum pointing up, trying to embed and lock itself even further in. There's no reason to be short this market, is what it is saying. It could fall at any point. The question is it a buy on the break? In SPY, you're traveling between the upper Bollinger Band and for the first time, the lower band. I want you to take a look with me as I go back here. That is October of 2020. This is October of 2021. So this is the first time you hit it. You know what happens when you haven't hit a band in that length of time? Some change took place. And we've seen the watershed event of the Fed moving from its definition of a relatively easy monetary policy to one of a tightening policy. That does not mean they're out to hurt the economy. They're out to turn off the money. The problem is they're still putting money into the economy until QE runs out in March. At that point, the hikes start coming, the market's discounting the hikes, and the marketplace is saying, okay, we were at a 22 PE in the S&P companies. Now we're down to about 19.5. The norm for 5 years, but they're all bull years, has been 18.5. You haven't had a bear year in a long time. What is the right number? So getting down here and coming to that, I think, is part of repricing the stocks as a group that make up the S&P 500 index. When you look at the emerging markets, well, if U.S. rates are going higher, where are they going at this point in time? You got to get into the point where the rates are going up, the market's absorbed it for the first levels, and the market stabilized. Right now, with the dollar soaring and U.S. interest rates not galloping, but working gradually higher, that weighs on the emerging markets. And this is a break low that while people are saying buy them, I just want you to see for the year 2021, you just made a new low for the whole move. So what these people are all excited about, I don't know, but I do listen to the analysts and I watch it in amazement sometimes. In gold, you stepped out of your uptrend. The market is now back under the 18-week average. It's caught in an overall pattern of the Bollinger Bands. The word is overall. It's not trending up or down. It's a disappointing market that it can't run with the inflation. I've said that during the days and on my daily reviews. And this was a terrible week for gold, down 2.3%, but more important, an outside week down. What can you say? Definitely hurt. If gold's gotten hurt, what do you think the miners are doing? They're coming to the lower Bollinger Band. Be careful down here, though. You've just knocked on the door of the 200-day average. That's a major, major number. My instincts, whenever that number's hit, the way it was back here, is you're in a low area. So as much as gold has come down, I don't want to get overly bearish under that 200-week average at this point. ARK, might as well talk about it. As much as Kathy Woods gets people saying, they're putting money into her fund and so on, they're just adding to their losses at this point. She was down another 3.65%. This is a stock that was near the 160 level. It has shed almost $100 a share. I know that people are saying it'll come back, but at what point is your pain threshold been annihilated? Or are you saying, well, her holdings are good, I'm just going to ride it out? For me, when it's going to turn is when the red line closes over 21. Until that, rallies in the market, nice, but you're getting a bearish crossover. You're about, when you reopen on Monday, to get the 18-week average underneath the 100. That's going to be considered a bearish crossover. Then you have the shorter-term average, the 18-week under the 100-week. The 100 weeks already. I don't have the 200 on here. I should get it so that we take a look. I was talking wrong. That's the upper Bollinger Band. Just not good. In Amazon, down and away. Been getting hit hard, but I expected that. One of the things I tried to explain is retailing to people. And this is an unusual retailing season, but your Christmas shopping was done between November, that's the reality of it, and early December for the vast majority of it. This was the return season. Did any of you read the story just recently in, I think it was Reuters, on what happens with your returns? You know, when you return something to Amazon, they'll charge the retailer if they want to get that back. Otherwise, it either goes, depending on how they grade it at Amazon, into a landfill, or it goes to somebody else that can repackage and do certain things with it, but it's got to be marked as such and what it does. There's an expense that Amazon even makes back from the restocking. I did not know any of that. I'm learning. Down, coming back up. We'll see if it can get over the Bollinger Band, but this is still in big time trouble. Is it saying that the markets are such that the consumer wants to back off of things for a bit? That's another story that you have to consider. Apple, fired on every cylinder. You can't ask for a company to give you better earnings, in my opinion, than what they just released this week. And what did the market do? It came down. We often talk, if it's going to fall back, it tries to regroup against the line in the sand, the 18-week average. Did not throw out a buy signal, but certainly acted very nice as it has back here. And each time recently that it's held that 18-week, an approximate number. So we'll see what it wants to do. It's definitely not in the buy camp, though. Tesla, underneath the 18-week average. Is it going to challenge the 751 level? So this market is now getting back down to its numbers that came about. Remember when we had that sell, when Elon Musk was selling all that stock because he was exercising options, had tax obligations, fell back. You're under those levels now. So it's falling on its own weight. My problem with Tesla, and I do have a problem with it, I am seeing every auto manufacturer in the world have Tesla on their radar scope, and they're going after them. Now, yes, Tesla doesn't make some of the lower end models. You know, they do have, what, a $40,000 or so entry, I think, or maybe a little higher on the Model Y. But certainly the big boys are going after their top end that they're here. We'll see what happens, and I think the market's feeling that. Going after them and having cars on the road, have you seen the new Lyric? Nobody else has. Have you seen any of these trucks that they keep talking about, all electric? Nobody has, including theirs. So the market's slipping back. Could it get to the lower band? It certainly could at any point in time. TLT, the combination of the 200-week moving average and the lower Bollinger Band, that's powerful. So you're getting a bounce, but I don't think it's a trend change. You know, I think the pros are waiting to go short up here if they can get momentum up and get the market away from this momentum that's just locked in on the downside. They'd like to get a bounce, I think. And that's pretty much where we go. That covers us for the weeklies. This was the news of the week, by the way. Baker Hughes coming out, some more wells coming on. We're tomorrow going to get the Dallas Fed. We're going to get the Chicago Fed PMI. In China over the weekend, if you take a look at these numbers across the board, and you can see them right through there, everything's slowing down. And with the lunar holiday kicking off Monday, I don't see it picking up this week. It'll be afterwards that it comes at you, and it comes pretty strong right after that. If you've watched in the past, the whole country, while they say closes down, you do get some buying out of the trade managers and so on. They'll use this period. China's traders are pretty savvy, and they'll pick up some markets, in my opinion, that the prices, if they fall too much, they'll be all over. Want to remind you, I want to be the guy you go to in the morning when you want to know what a chart looks like. I record starting at 5:30 a.m. Central Time futures because they make up what the SPDR ETFs do. You know that. I mean, if you're looking at TLT, just look at the bonds and the notes. SPY, just look at the S&P. DIA, just look at what the Dow is doing. So a lot of this is made up there. So I start off my traders with a combo package. Many of the traders take that. They'll take this, and then they want to see what the SPDR ETF does. So we wait. At 9 in the morning, I start recording the SPDR ETF videos. By then, I've gotten all the government reports of the fundamentals, the major reports coming out, like I just showed you here, where the markets might be headed. If there's news out of Europe with what's going on with Russia and taking care of the UK, and it's all covered. I cover 40 charts in the SPDRs, the individual stocks and the like, and I do rotate them, as you saw. I asked you for what you want me to cover. How do you get this data? It's so simple. Just go to our website. Under the word research, everything in detail is explained there. Might want to take advantage of that. I'm Ira Epstein. I'll see you all tomorrow. Have a good day.